Good morning, I'm Tim Carter. I'm a Client Portfolio Manager on npower's Optimisation Desk. Welcome to this morning's market update on Monday the 23rd of November. So looking at prices in the market today, we're seeing the curve actually coming under pressure despite some firm within day prices. Key drivers are, number one, despite the higher temperature driven demand, we've actually got a reasonably comfortable, albeit slightly short gas system. Number two, temperatures are due to get back up to seasonal normal by the middle of this week before getting even milder the following week. And finally, number three, despite a triad forecast for this afternoon, we have reasonably comfortable power supply margins today. Those are your key headlines. If you'd like any more information, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So looking at the gas system to start with, as I mentioned, we're seeing much higher demand due to lower temperatures today. We're about 2 degrees below seasonal normal, which is driving up demand above about 25% higher than we'd normally see at this time of year. But despite that, line pack forecasts are currently only 6 MCM short. We've seen a lot of market players anticipating this cold snap selling supply into the higher prices. So amongst others, Langer-led flows up at 70 MCM, LNG exports at 46 MCM, along with BBL flows at 18 MCM, and storage withdrawals of 30 MCM are helping to provide the necessary supply to meet that extra demand. We've also seen IUK exports lower slightly, which is softening the demand a little bit. But looking at temperatures in a bit more detail, as I said, we're about 2.5 degrees below seasonal normal today, but by midweek on Wednesday we should be back at seasonal normal levels before temperatures across Europe pick up the following week, peaking at around about the start of December, and could be around 4 to 5 degrees higher than seasonal normal temperatures again. So that's pressuring the demand outlook and therefore the prices, particularly on the curve. Looking at the power markets, as I mentioned, we have had a triad forecast for this afternoon between 5 and 5:30 today. That's a moment of peak demand across the winter period. But despite that, we're seeing reasonably comfortable margins of supply, nearly 9 gigawatts today. That comes with healthy wind generation, around 2.5 gigawatts being produced currently, but that should pick up to over 4 this afternoon. We've also seen CCGT and coal demand supply pick up significantly, with CCGT providing over 16 gigawatts and coal 13 to help ease that supply concern. Elsewhere, the interconnectors are a little bit down on where they were in terms of imports from the continent. That comes with French nuclear reactors having delayed restarts today, along with the continent also experiencing these colder temperatures driving up demand. Finally, elsewhere, we're seeing a slightly weaker pound against the euro today, following good PMI data from Europe, but that's offset partially by lower oil prices, which are trading back below $44 per barrel. That's it for today. Have a great day, and we'll speak to you again tomorrow.